Okay friends, so now we are going to see how the allowance method of recording bad debts actually works. So let's assume we are at the end of the period 30th June 2022 and we have a total of receivables. This is the ledger balance, which is 100,500. It is on the debit side. Of course, receivable is an asset, so it has to be on the debit side. And our sales as per ledgers are 750,000, which is on the credit side. So let's see, let's make it black. So of course the account receivable has to be on the debit side and the sales has to be on the credit side, right? So this is not accounting entry, right? These are the balances. Somebody can ask why sales are 750,000 but the receivables are only 100,000, because some of the sales are on cash and some of the receivables, even if all the sales were on receivables, some of the receivables have been collected during the period. So usually the receivables balance is usually less than the sales balance. So now according to the allowance method, which says that you have to record the bad debt in the same period in which the sale is recorded, this means that within the year 2022, we have to record the bad debt expense, but we don't know how much of this 100,500 is going to be bad debt. So let's further assume that we have the breakup of this 100,500. Customer A outstanding balance is 40,000, B is 25,000, C, D, Z. So together they make up the 100,500 dollars, rupees, whatever the currency is. So this is the receiver span. So we don't exactly know which of them is going to actually not pay in future. We trust them. We have seen their financial performance. They are all expected. They are all likely to pay. But based on our past experience or based on the industry statistics, we know that actually out of this 100,500, somehow we worked out that account receivable of 11,500 will not be collected. We don't know why this customer Z, D, or maybe some payment from A will not come. So, but our past experience shows that this amount will not be collected. Now, how we arrived this amount, we shall discuss in the next video. But by now, let's assume that we estimated that this is the amount which is not going to receive. So now accounting standards say that you have to record this amount directly on 30th June of 2022. So how should we record? We should record it as a bad debt expense debit and account receivable credit of 11,500. So this is the same entry that we would have been made if in the next period, when actually we got to know that some customer is not going to pay. But accounting standards say no, you have to estimate in advance. And of course, the actual bad debt we will see may not be exactly equal to the estimate. But we have to record this entry on the estimate basis. Bad debt expense debit, account receivable credit. Now there is one more issue. If we credit account receivable, which account receivable we credit? Because in the detailed record also we should mention that if we remove account receivable, we credit account receivable. Now this means that the account receivable, the new balance of the account receivable will come out to be 100,500 minus 11,500. So this will be the new ledger balance. So if it is 89,000, so we need to make it 89,000 as well. So this total as well. So if we want to make it 89,000, which customer we reduce, right? So we don't know which customer. So if say I reduce customer C, right, then I can actually have a different number in my. So for example, I say this minus 11,500 and all the others are same. So this will make my total is equal to sum this total. So why it is 100,500? Okay, so it is 9,500, right? So it is 89,000, right? So what I have done, actually I have randomly taken that, okay, this customer is not going to pay, but I don't exactly know, this is not the right treatment, because I make this customer 8,500 in my detailed records. Then the issue is that this customer actually might pay and I will not follow it up. I will follow up only, okay, customer, when I will call him, I will follow up him, I will see my ledger, the outstanding balance is 8,500, so I will also only follow up 8,500, whereas the total outstanding is 20,000. Now this means that this practice is not correct. So we should not actually reduce the account receivable. We should keep the account receivable as it is. So we should even not reduce account receivable. So then we say, okay, we create a new account, which is a contra account, which is a Mrs. account receivable, which is allowance. for bad debts, or there are different names. Sometimes we say DEBTS, or allowance for uncollectible, or allowance for uh, low performing debt, or things like that, right? So we debit the bad debt expense, we credit the allowance for bad debt. Now what is allowance for bad debt? This is the contra asset account, as we have already seen earlier. So this contra asset account, to which asset it belongs? It belongs to account receivable. Now this means that whenever we make the balance sheet, so let's make the balance sheet, right? So in the balance sheet, what we will do, we will put the date and the name of the company, right? We already know, so these protocols I am omitting for now. So we'll show many assets, right? And then we will show accounts receivables. So excuse me for the spelling mistake, 100,500. Then we will show less allowance for bad debt, which is a credit balance, so it has to be deducted from the debit balance. So we show it in the minus sign, and usually a minus sign is a credit sign, is by bracket. In accounts we don't show the minus sign, usually show the brackets. So anyway, I'm not formatting it for the bracket for now. And this is my total balance of account receivable, which I'm going to show in my balance sheet. So there are some other assets, say this is some other asset, this is some other asset, right? And this is my account receivable. So this actually serves two purposes. Number one, I kept my account receivable as it is, so my detailed record actually matched with the totals of account receivable, and I created a contra asset account, which means the net realizable value, the net cash collectible value is actually 89,000. I don't exactly know which customer is not going to pay, but I know that some customer will not pay based on my past history or based on industry history. So this is the allowance method, right? Now what happens? Let's say on 1st June, let's say in the next year. So this was actually 2022. Now in the next year, let's say on 1st August, or let's say on 9th September. So right, so let's make it black. So see on next year, 9th of September, uh, this is not 9/11, this is 9/9. We came to know that, okay, this customer D is actually not paying, right? So now what should we do? We should remove D. So all the other things should be same. This should be 9,500. So this should be 0 and this should be 9,500. So now this means that, and the total of this would become 94,500, right? So now this is actually happening when this customer is not paying. If we came to know this on 23rd September, so this is now actually 9 September, sorry, 9 September. So on 9 September, when we actually confirm that customer D is not going to pay, so we should remove customer D from our list. So we should credit accounts receivable, because now we are sure that it is actually customer D who's not paying. So we credit it by 6,000. And what we debit? Do we debit bad debt expense? The answer is no, because bad debt expense has already been estimated and debited in the last year. So we debit the allowance. We debit the contra asset, allowance for bad debt. So this is the set of sort of a parking account which we used in the last year. So it has been reduced now. So if we draw the balance of allowance for bad debts, right, bad debts. So this is actually my general ledger accounts. Let's make all of them blue so that they make more sense. And this is my ledger account. It is no borders, and then this is complete border, and this is actually, so I'm not making the actually, so this was 30th June. I'm not making the description column, I'm just making the debit and credit columns. So this is the debit column, and this is the credit column, and this is the date column. So I'm not making other columns for now. So it was credited by 11,500 or 2032. So it was 2022. Right. So let's make it this way so to make more sense. And now on 9th September of 2023, what happened? Okay. So what happened? Okay. So we have to keep it this way, and we have to keep it this way. Okay. So now on 9th September 2023, this account has been debited by 11,500, right? Sorry, by 6,000. So what is the net credit balance in this account? It's 11,500 minus 6,000, so it is probably 5,500 is the net credit balance in this account, right? So this means that if there is no other bad debt in 2023, now this means that our past last year bad debt was actually overestimated, right? Our actual bad debt was 6,000, but we estimated bad debts for 5,500. So this was our overestimation. But keep in mind that an estimate is not supposed to be exactly correct. So we do not say this is a mistake. So this is not a mistake. Was just an estimate, and for estimate, accounting says it is equally possible that estimate either was overestimated or underestimated. So how do we do what we do with this balance in the next year? So that we will see in the next videos, right? So this is how the things go on. So see the implications of these combined entries. In the allowance method, when we record the bad debt expense, it is always recorded towards the end of the period as an adjusting entry, right? And the impact of this adjusting entry is that your expense increases and your contra asset increases, which means your asset balance, account receivable balance, net balance, cash reservable value decreases, right? But no specific customer is hit. Now, when it comes to actually allowance for bad debt, when it comes to the actual default of the customer we confirm we got to know that the customer is not going to pay. So we debit account receivable, we debit allowance, right? We do not debit expense again, we debit allowance, and we create account receivable, and we mentioned even the name of the account receivable that is actually it was delimited, right? So this is the delimited. So we create that account, right? And this is actually known as the actual write-off, right? So the first method that we discussed in the last video was direct write-off method. This is the allowance method. In allowance method, we record two entries. One entry is at the end of the period for recording the estimate, and then another entry, and not necessarily another one entry. There can be another two entries, another three entries. Maybe the customer Z also defaults. Maybe customer Z pays half and then default on the half of the amount. So we record again this entry again. So end of the day, the allowance account will get updated and the receivable will be removed accordingly. Receivables will be removed from our books. They are again getting credited. And finally, our allowance account will either show a credit balance. Now think over it. Can our allowance account can have a debit balance towards after during the year, sometime during the year? Can it turn into a debit balance? Just think over it. And we will discuss this in the next video.